Hello all, welcome to Ignite IS. Myself Mohan Reddy. I teach Indian economy. Today we are going to discuss about one of the topic in the economy. Rupee sinks 93 paise to end all-time low of 89.61 a dollar. So that means Indian rupee has been depreciated with respect to the dollar. In this class, we will try to understand what are the basic reasons for the depreciation of rupee in the current global scenario, and we will try to understand consequences, what should be the remedial measures need to be taken by the government. So first reason for the depreciation of rupee against the dollar is high global demand for the US dollar. Many of the countries are importing goods and they pay in terms of dollars because dollar is considered to be called as global reserve currency, which is used for the external trade. And most of the countries are asking for the dollar, and the other countries' currency will be depreciated. And recently, Indian rupee has been depreciated to its lowest level. Second reason is a persistent trade deficit. So trade deficit means imports are more than the exports. So if any country which imports are more than the exports, then there is a high probability of paying US dollars to other countries may depreciate the rupee. So what are the goods which we import extensively is crude oil, electronics and gold. Next, other reason is like inflation differentials. So around the world, there is a higher inflation in global countries, so which has reduced the purchasing power of the Indian companies and the people, and it has weakened the Indian rupee on the global level, so and depreciated the rupee in the current context. So next one is interest rates, which were being defined by the Federal Reserve. Whenever Federal Reserve is increasing the rates, whatever the investments spent by the global companies will be taken back and put in many of the safest areas like US bonds and other areas, has created a problem for India because foreign investment is going back is one of the factor for the depreciation of rupee. Next one is like external debt. So India is taking certain loans for the economic development. So one of them way is internal loans, okay, or external debt. Internal debt or external debt. So when we repay the external debt, we have to pay in terms of dollars, and this has created a increase in the demand for the dollars by the global organization which we have taken the loan, and rupee has been depreciated. Next, other reasons are like most of the investors are taking back the money because of the global uncertainty due to wars and due to tariff policy of the America. So they are putting their money in the safe havens. Safe havens are currently US economy or any of the other countries in which the taxes are almost near zero. So because of these particular global political tensions, most of the investments have been taken back. That investments are also taken back from India and put in safe havens, has depreciated the rupee. Next one is whenever low exports and their competitiveness is declining, then also the foreign investments which are coming to India will be decreased and the rupee will be depreciated. So in which sectors exports are been reducing means particularly the strong IT sector exports are declining in recent past, and manufacturing exports has been affected because of US tariff policy, and internally also we have certain problems that many of the MSMEs are not getting proper technology. They are not able to compete with the global companies. There are internal problems with respect to manufacturing sector. External uncertainties has reduced the export competitiveness, and exports in a value has depreciated the India's rupee. Next one is what are the consequences of this particular depreciation of rupee? There are positive outcomes are there and negative outcomes are there. Positive outcomes is that whenever currency has been depreciated, there is a possibility for the increase in the exports, particularly manufacturing and service exports. Next, higher remittances value. So remittances means any people who are living in other country sending the money to Indian families can be called as remittances. That NRIs are spending a lot of money which has been benefited to India, and the value which is coming to India is higher whenever currency has been depreciated. Next one is negative outcomes. So negative outcomes like costlier imports, whatever the imports like crude oil, fertilizers, machinery, electronic goods from other countries will be cost will be increased, and it may be called as it may eventually lead to inflation within the country. Once the crude oil prices increases within the country, automatically inflation will increase unless the government has to take certain measures. Next one is like a higher fuel and transportation cost. So as the cost of fuel is increasing, transportation cost also increases. Logistics sector, power and daily consumption will be affected. Next one is like raising external debt burden. So whatever the loans we have taken, we have to pay them in terms of dollars, and the repayment cost will be high when currency has been depreciated. Next one is the people who are studying in other countries, people who are traveling, medical expenses in other countries will increase when currency has been depreciated. Next, the forex reserves. So the forex reserves of the country will be decreased when currency has been depreciated. These are all considered to be some of the consequences faced in any of the economy. India is no exceptional. And what should be the remedial measures need to be taken by the government? So first one is RBI should intervene in the forex markets. So whenever currency is being depreciated, RBI will try to pump the dollars into the economy and stabilize the falling of rupee. So that is one of the first step taken by the government. And on behalf of the government, RBI will buy or sell the dollars. Next one is like interest rates adjustments. So whatever the Indian markets are there, if you want to attract the foreign investments and stabilize the rupee depreciation, the government has to reduce the interest rates, or raising interest rates will be reduced so that the foreign investment will come to India, the rupee depreciation will be stabilized. That is another measure. Next one is like currency swap agreements with various countries. Instead of dollars, we will try to do the trade in terms of local currencies. Like UAE, Japan, BRICS nations are trying to do the trade in the local currencies through an agreement called as currency swap agreement. Next one is long-term measures. So if we want to increase the foreign currency, one of the ways is to boost the exports. So how do we boost the exports? Means government is implementing PLI scheme for the development of manufacturing sector, which was been decently growing at a faster rate, and accordingly the exports are also increasing. And tech driven industries, diversification of export basket is also some of the steps taken by the government so that exports can be increased in a long run. Next, import dependency has to be reduced. So India doesn't have semiconductor manufacturing units. India as a policy has to take certain measures to establish semiconductor units, and renewable energy sector has to be developed, and domestic defense production has to be developed. If you focus on these areas, there is a high probability that so import dependence can be reduced. Whenever there is any reduction in the import dependence, obviously it will have an impact on the depreciation, it will be halted and currency will be appreciated. Next, another step is like controlling of inflation. Inflation can be controlled by the RBI on one side and government on other side. So based on the monetary policy and fiscal policy, any control of inflation can give an edge for the companies to export, and at the same time depreciation of currency can be reduced. Next one is like strengthening financial markets. So financial markets and capital markets are growing at a faster rate. So many companies are listed on the stock exchange, and in that foreign institutional investment is coming to India, which has to be stabilized, and government should also take certain measures in a long run to attract the foreign direct investment by changing or liberalizing certain norms. So that should be the approach, and we need to attract the foreign investments in such a way that domestic industries should not be affected. Next one is currency internationalization. So currency swap agreement is considered to be one of the means, and at the same time doing the trade, external trade in terms of local currencies is considered to be called as internationalization of currency, and if that is promoted, we don't require any dollars, currency depreciation can be halted. So these are some of the measures need to be followed by the government to stop depreciation in a long run. If you like this video, like, share and subscribe. Thank you.